Today is the 21st of July, and we wanted to touch on AMC. The reason we've been talking a lot about AMC is because the options position is so big and the options volume is so big that we feel the options market has a lot of control on how the stock moves. And that doesn't mean that the stock only moves by options. It just means that given enough time, the options position and the hedging tied to that tends to overwhelm shorter term price action. Now, the last few days in AMC have been pretty incredible. The stock has traded up off of lows around 30 to 31, all the way up to 47 late last night. It started off hot again this morning, and then it's really cooled off down to this 40 strike. Now, we've posted a bunch of videos, particularly last week, that talked about how important this 40 strike was. And if we look at our equity hub, in this tool, you can look at over 3,500 different stocks. So if we pull up AMC, what you can find is all of the largest options positions are still concentrated at the 40 strike. This means that all of the hedging flow, like a magnet, should pull the stock back into 40. And what was so interesting about this in particular is that even though it had this explosive move higher, even though the stock moved so much yesterday and had such a bullish run, over, I think 25%, I believe, was the move yesterday, the major options position did not move from 40. So that this morning was a big signal that that run higher, that push higher, was likely going to fade because the options market wasn't pricing in a higher move. There wasn't enough call positions traded to push the center of hedging higher and to support those higher prices. So we have 40% of the total options position expiring on Friday. And it's likely the stock is going to hold into this 40 area into Friday because, again, the largest options position remains at 40. Our view is unless this key gamma strike shifts up to 45 or 50, the stock is going to hold this level over the longer term. Now, this is something that we tweeted out earlier to show that this wasn't simply a hindsight call. This was around 11:45 this afternoon that we posted that not only was most of the gamma at 40, big bearish flows came into the market. And those big bearish flows can be seen in our hero indicator. So we show this on the Bookmap trading platform. This is our custom indicator that reads the options market. Now, every single one of these little triangles is an actual individual options trade. And you can see the sum of those trades is here in a cumulative form at the bottom. So what you need to know is off the top, when the stock ripped higher, a big or a series of very large put trades came in, and you can see those here as this hero indicator drops. This shows us that negative delta trades come in, and then throughout the entire day, there's been nothing but either people buying puts or selling calls. One of those two, whatever they are, they're negative delta trades, and that has just been pressuring the stock all the way down to 40. Now note, there was huge liquidity here at 40. That's why this is such a bright white area. So we had huge liquidity offered there at 40. The stock bounces right off of that line, and then we see possibly a little turn in the options flow, but we basically feel like now the stock is kind of around fair value. The issue with the short-term calls that expire Friday now is that they have a lot of decay. People may call this charm, which is basically the idea that these calls are going to decay rapidly, and market makers who are long stock against their short call position can start to sell stock, right? So it's hard now to juice the stock because of the fact that the expiration is now approaching. Monday and Tuesday are the best days to kind of get the most bang for your buck for those short-term call options because they have a few days to expiration. You can get a little more punch out of them. But as we get closer to every Friday's expiration, those call positions weaken and the stock typically weakens along with it. So again, the 40 strike is the big number. We don't see that shifting higher into tomorrow. But you can see how you can use this combination of indicators to figure out what a fair value, as we call it, for the stock based on those large options positions. We hope this video is helpful. If you have any questions, please leave them in the comments below.